Hello, welcome back to Wildpad X. Bitcoin is currently trading at $95,000, holding steady after a bounce over the weekends. Over the past 24 hours, it's been mostly consolidating, showing little movement. But with the market catching its breath, we have to ask, is it the sign of strength or a pause before more volatility? Let's dive in and find out. 2025 is the year after Bitcoin's halving. And historically, this is a time when the market has shown the most explosive moves. However, with recent price action, some investors are wondering if the bull market is already over before it even started. To understand this, let's take a closer look at what has happened in previous post-halving years. In January 2021, Bitcoin shot up by an incredible 45% in just 7 days, but that was followed by a sharp 31% decline after the next 2 weeks. Later that year, Bitcoin experienced a brutal 50% crash in just 10 days. Despite these wild swings, 2021 was one of Bitcoin's most profitable years. The same pattern appeared in 2017, another post-halving year, when Bitcoin faced multiple corrections over 30%, yet it ended the year with massive gains, reaching new all-time highs. Now let's compare those numbers to the current bull run. From its most recent all-time highs, Bitcoin has only corrected by about 18%, which is relatively mild compared to the correction we saw in previous cycle. This suggests that the current volatility is not only normal but expected during a bull market. Beyond the charts, the fundamentals are incredibly strong. Institutions like BlackRock and Fidelity are doubling down on Bitcoin. Their Bitcoin ETF is doing incredibly well. Global adoption continues to rise, with more countries and companies integrating Bitcoin into their systems. And with the halving reducing Bitcoin's supply, the market dynamic favor long-term price growth. So while the correction may feel unsettling, history and fundamentals tell us that there's still plenty of room for upside. The 2025 bull market is far from cancelled. In fact, it's likely just getting started. Let's take a look at today's news. The first news. According to reports, Donald Trump is preparing to issue executive orders on cryptocurrency on his very first day back in office. These plans are part of the broader economic policy overhaul, aiming to address regulatory challenges in various sectors, including the rapid growing digital asset space. While the specifics of these orders are still under wrap, insiders claim they will focus on bringing more regulatory clarity to crypto industry. Trump's stance on crypto has shifted since his early criticism of Bitcoin, reflecting the increasing influence of digital assets on global market and the US economy. This definitely signals a growing recognition of crypto in political circle. Second news, Michael Saylor, the executive chairman of MicroStrategy, has released his 10th consecutive weekly update on Bitcoin's performance. His update has become a staple for those who's tracking the intersection of institutional investment and cryptocurrencies. MicroStrategy currently holds over 447,470 Bitcoin, making it one of the largest corporate Bitcoin holders globally. In his latest post, Saylor highlighted Bitcoin's continued resilience despite the volatility, asserting its position as a reliable store of value. MicroStrategy's aggressive Bitcoin strategy has influenced other institutions, showcasing how a long-term approach can yield significant results. With Bitcoin stabilizing near 95,000, Saylor's public advocacy continued to fuel confidence in the asset among both retail and institutional investors. The third news. Robinhood, the popular trading platform, has been fined $45 million by the US regulator for violating securities law. This penalty follows a detailed investigation revealing that Robinhood failed to adequately supervise its broker and maintain proper record for customer transactions. The company has faced significant scrutiny in the past, particularly during the 2021 meme stock frenzy involving GameStop and AMC, where it restricted trading during a period of high volatility. The latest fine adds to a series of regulatory challenges, further spotlighting Robinhood's operating practice. The $45 million fine serves as a reminder of the risk associated with centralized platform. For users, it underscores the importance of understanding the platform they use for trading and investing, as regulatory issues can directly impact service reliability and trustworthiness. And personally, I think a $45 million fine is just a slap on the hands. That's a wrap for today's episode. Correction and volatility are part of Bitcoin's DNA, especially in post-halving years. History shows us that patience often pays off for those who stay in the course. Is the 2025 bull market on track, Or are we facing a new kind of challenge this cycle? Let me know your thought in the comments below. Stay invested and I'll see you tomorrow.